Welcome to Market Mashup, our recap of financial markets and what we have in store for, really the month of February that's going to impact your portfolios. I'm Scott Nasca, President of Generation Capital Management. January was a good market for stocks overall. We had the Dow Jones up 1.3%, S&P 500 up 1.7%, and the Nasdaq was up 1%. We had the 10-year and 2-year Treasury spreads that we've talked about before continue to stay inverted, with the 2-year at 4.27%. The 10-year was at 3.99%. So we had a 28 basis point inversion still at the end of January. So this has been a trend that's been going on for quite some time now, since in 2022. Like I said, it usually leads to economic slowdowns. Usually when we see the shorter end of the markets yield higher than the longer end. But, data hasn't shown that yet. But, with an inversion still taking place, most likely we will expect to see some economic slowdown coming soon. Just looking at some commodity prices, we have WTI crude ending the month of January at 75.52 and gold at 20.39. So, overall, looking at economic data points in January's mixed message. The Fed Reserve met at the end, really January 31st, decided to keep rates steady, still looking at more data points. They didn't make any knee-jerk reactions in order to try and lower interest rates as early as the March meeting. And I think that sort of threw markets a little bit uncertain, with the bond yields spiking up a little bit towards the end of the month, as the Fed is not most likely going to be lowering rates as fast as the markets had anticipated, and maybe even with the amount markets are factoring in 5 to 6 cuts this year. The Fed really came out with more of a 3 to 4 range that they're expecting. So you had to have a little recalibration of the markets, the bond markets again. So that's how you saw yields shoot up across the board towards the end of January. GDP numbers still remain strong. On the economic front, the unemployment numbers still remain strong. Inflation is not going up, it remains steady, which is good for markets in general. But we want to see going forward, make sure there's no wage price inflation going on with the data points that will come out for the January numbers in February. So you just want to make sure that continues to moderate a slightly higher rate than inflation, but not moving too high itself. So month of January, just to sum everything up, steady as she goes for the most part. Stocks better. We didn't see any shocks on the inflation front or the data numbers that were coming out. It's always good to see an up January month. It tends to lead to a good 2024 if history repeats itself. But considering where we started at the beginning of the year versus where we ended, it is some positive numbers that came across. If you have any questions, feel free to reach out to us. Our website, www.gencapmgmt.com. Our team's here to answer any questions that you might have. Just give your portfolio a second opinion. Make sure that the allocations meet your goals and objectives, especially people getting close to retirement. You want to make sure that you are taking advantage of what the markets have to offer. Even looking at your non-risk assets, your cash assets, making sure you're utilizing those too, because rates are very attractive for cash management accounts too. So make sure that you are taking full advantage of all of your investments. Once again, feel free to reach out to us. Happy to answer any questions that you might have. I'm Scott Nasca, President of Generation Capital Management, and this is Market Mashup.